Good afternoon and welcome to CanadianAgMarkets.com. Today is September 2nd, just after the long weekend. Both US and Canadian markets were closed yesterday, and thank the Lord, children go back to school this week, at least in the province where I live. So it's very exciting because we can get back to some normalcy, normal scheduling as we move through this month. All right, let's get into what happened in markets today. We saw canola up $3.90 at 630.30. Minneapolis wheat was down 5.75 cents at 577.5. Kansas wheat was down 8.5 cents today at 517.5. Chicago wheat down 6 at 530.5. Chicago soybeans down 13.5 cents today at 1052.25. A result of soybean meal moving lower as well. Corn is up though, 2.75 at 418 even. Soybean oil is up about half a point at 52.20 per pound. Canadian dollar slipped a little bit today, 20 points down to 72.52. Live cattle and feeder cattle were both down marginally today, 239.45 for live cattle and 364.10 for feeder cattle. Both of those are the October futures. All right, let's talk a little bit about wheat. Australia raised its estimate for this 2025-26 crop year to above, thanks to above average rainfall in particularly in South Australia and Victoria. We'll kind of get into when harvest happens in those regions in a second. The Australian Agriculture Department now projects production at 33.8 million metric tons of wheat. So just to put that in perspective, that is still down 1% from the previous year, but it's 10% more than its June estimate, hence why there is some pressure on wheat markets today. The exportable supply of wheat is expected to increase with high carryover stocks as well. And they're estimating well above average forecast for production, the department says here. So this is kind of a map of where wheat production is grown in Australia, and I'll kind of give you an idea here as to the harvest progress, which I guess I shouldn't call it progress. We have not started, or Australia has not started their harvest. What they will start, though, is in Queensland. That's that state here. That is September to November. It's the earliest area that is harvested in Queensland, and that's about to come online very soon here. The next is New South Wales. That is this province right here. And it's about a month later. So October to December is the harvest period for that. Western Australia, so that's this stuff over here. This is also October to December. It kind of peaks in November. This area is the biggest area of wheat production. So that's the big onslaught of harvest. It also is the big onslaught of the exportable amount of wheat. A lot of this eastern wheat is not exported. It's used internally for feed and food and things like that. This Western Australia crop would be considered similar to hard red winter wheat or hard red spring wheat in Canada. So that is where the bulk of it comes from. About 40 to 50% of Australia's wheat exports come from that province alone. Then we move into the November to January period. So again, this is November, December in Western Australia. In South Australia and Victoria, that's this little state down here in this kind of pocket here. This is the later harvest. So that's November to January in both of those states. So just to kind of keep that in mind, we're getting close to harvest or the start of harvest in Australia. The production estimates are being raised, and that is putting continued pressure on the wheat markets as well. Another story here, Sov Econ, which is an analyst firm in Russia. They've today they increased their export projections to 43.7 million metric tons in this 2025 season, which is up from 40 million tons last year, and it's actually up 400,000 tons from Sov Econ's previous estimate, which was raised 8 days ago. So, back on the 25th of August, Sov Econ increased its forecasts of production, both production and and exports. So its production estimate is now 85.4 million tons, and its export projection, as we mentioned, is 43.7, which previously it was 43.3. So 400,000 tons above its previous estimate, which was only 8 days ago. So we're talking about quick changes in the Russian S&D, as far as production and exports go, which is also putting continued pressure on the marketplace here. So just to give you an idea, so Savicon right now has 85.4 million tons um, of production for Russia. The USDA currently has 83 and a half. If that gives us an idea as to what the USDA will do as we move towards the WASD this month. All right, let's look at some charts. Here is December HRW. Now, as you can see, we saw a down day in HRW. However, it did not make a new low, but it did push the rest of the complex lower. Here is December spring wheat. It made a new low of around 570 today, and it continues to get pressured lower. Canadian harvest is in the gut slot of it right now. So the Canadian supplies of hard red spring wheat are probably most flush now, or they will be in the next couple of weeks here. Even though, and this is just my opinion, I don't know how much wheat farmers are selling unless they absolutely have to, because right now, the way prices are structured, they are structured well below the cost of production, which means they're selling wheat at a loss. Which does raise the question about just how much wheat the Canadian farmer is going to sell. Canola and some other commodities are still in a profitable situation. So we may actually see downward pressure in some of those other markets as we move through harvest, because in order to generate cash, as farmers may keep wheat in the bin, unless it's a capitulation deal where farmers just dump the wheat because they are, in need and tired of the stresses of marketing, as we've seen significant declines in the markets recently. Just some good news to kind of end off the day here, or at least some good news in the corn market. Corn is up today, again, back towards 423. We could hit the 4.25 mark pretty quick here. And we do have some resistance at 431. So that could be a target for upward price movement here. I think what's happening here is that there's some idea that the top of the corn yield is getting taken off here. There is some southern rust and pollination issues showing up across much of the corn belt. This next thing, this is a image back from the 15th of August, and it just shows where the southern corn rust is coming in. So I think the market is starting to realize that the USDA's yield target is a little bit lofty. Let's show that here. So right now, the USDA has the yield at 188.8, which is an absolute record corn yield for the US. Last year was 178.3 last year, and that was already a record. So currently, the USDA has such a large yield that I think the market is reducing or taking the top off that. I don't think the market really believed that to begin with, but I think these issues that are arising in corn are helping to elevate the corn market back up to, we're well back into the $4 handle now. So that's a good thing in corn, and we could kind of continue to see it go until we see some confirmation from the USDA. That'll be an interesting one to see what average analyst estimates are for this coming USDA report. All right, let's get into some of the oil seeds here. We saw some small gains in soybean oil today. It was about 1% higher. I don't really think this changes the outlook or trajectory at this point. We have some support down here at about 51 and a half or so. It's kind of a neutral day today for soybean oil. Canola was kind of the same thing. We did kind of double tap down towards the 680 or 620 level, on November. Not to say that this is a support level by any stretch of the imagination. I think it's more of a neutral or, a non directional bias day in both of the soybean oil and canola markets at this point. We did see some losses in November soybeans. That was a little bit concerning as we broke to kind of a new low today, but we didn't close below that previous low. So again, more of a neutral, but still a pretty strong down day. It was down about 1.3%, or as we mentioned earlier, about 13.5 cents. I think a lot of this falls on the blame of December soybean meal. So I think that there is some estimation that crush is going well, and the purpose of crush is to extract the oil for the strength of the soybean oil in this marketplace. But that is raising the stocks of soybean meal, and I think that is pressuring soybean meal today. As we saw, November soybeans traded alongside, or at least directionally, with soybean meal today. Sometimes it trades with soybean oil, sometimes it trades with meal. Of course, 80% of the crush or so is meal, so it makes sense that it trades more with meal, but that's not always the case. All right, if you want more in-depth analysis from Ireland Comalafoyer from CanadianAgMarkets.com, you can subscribe to our Premium Insights. We send out morning reports every morning. We send out ad hoc reports like we did for Statistics Canada last week. We'll do so for the USDA at their next report, and we send out a weekly market update as well. So yeah, it's only $99 a month. You can try it out. You can cancel anytime. Although we know that you'll love our reports. So subscribe at CanadianAgMarkets.com/subscribe, and we'll get you hooked up on your first month. And we'll even send you last week's reports. So get signed up, and we'll get moving. All right, that's all we have for you today. Thank you so much for joining us. We will see you again tomorrow.